Hey guys, welcome to my channel. Finally, my YouTube channel. I decided to start, you know, vlogs because I notice I'm always on Facebook and anytime I share important stuff, they get lost in the comments, in the timeline, in the archives. So if you are just joining me for the first time, I want to welcome you and I want to let you know you are in for a very, very big treat. So if you haven't done so yet, subscribe to my channel. Number one. Number two, turn the ring bell on. Is that how YouTubers say? Yeah. So without further ado, let's get started with today's topic. And today's topic is how can you start trading stocks? Question number one, what are stocks? Good question. So stocks are securities that represent an ownership share in a company. For companies, issuing stock is a way to raise money to grow and invest in their business. For investors like you who's about to start investing, stocks is a way for you to grow your money and outpace inflation over time. When you own stock in a company, you are called a shareholder because you share in the company's profit. All right. This has been a very good question that I've received from very many people. And before I start, I want to let you know, number one, I'm not a professional trader. So I'm only sharing the things that work for me with you in hopes that it can help you start making some little bit extra money. Always remember, invest in what you can afford to lose, right? So let's get started. How do you start trading stocks? And I'm going to tell you the best way to do this is to pick stocks that you're familiar with in the beginning, right? It's just like your favorite brands. Some of you like specific, certain type of hairstyles, certain type of hair. You get it from specific stores because you're familiar with that brand. Some of you like certain specific style of shoes. So some of you are into Louboutin, Christian Louboutin. Some of you are into Payless. Some of you are into who else? Comment down below. Let me know what type of shoe brands are you into. You're into those brands because you are familiar with them. So the same thing with stocks. When you start trading, get into stocks that you're familiar with. So I'll give you an example with me. When I first started, I got into Facebook. I also got into a little bit of Amazon. I got into Verizon because I'm familiar with them. I use Verizon Fios on my TV. I am always on Facebook. I love Facebook. I love everything they're about. And the reason I tell you to pick stocks that you're familiar with is because you're going to be intrigued in researching about them. You're going to know when something bad is about to happen because you're always following them. You're always, you're excited to know more about them and everything. Right. So my first question to you, what company are you familiar with? What company intrigues you, right? Think about it. What dish soap do you use in your kitchen? Are you into Johnson & Johnson? Now you ask yourself, do they have a stock? Do they trade publicly, right? What car do you drive? Do you like that car? So you ask yourself, that company, do they trade publicly? So this is something you might have to start researching and Googling a lot because you're going to need to do that. So once you have identified the stocks that you like, now pick 5 or so, right? Oops, I said light. So if you pick 5 or so stocks, make them a little bit into varieties, right? They are categorized into tech stocks, Some of them are in manufacturing, right? Try and make your options vast, so that if something happens in the tech world, you didn't have Facebook, Google, Amazon, all of them in one portfolio. If something happens, it tends to mess up with the whole, what do they call it? That whole family, right? Is that the right word? Again, I'm not a professional. So once you have identified the company, number two, you are going to evaluate their financial health, right? So there are some very, very stable companies out here. A company like Amazon is a stable company for you to invest in. But the only thing is, it's quite expensive. A share of Amazon right now goes for $1,700 the last time I checked, or $1,800, right? It might be a little difficult for you if you're starting out and you don't want to invest that kind of money in it, right? So once you research those companies, find out which ones are, which ones can you afford? Which ones can you get into? Because once we start dealing with options and we dive deeper into other ways of trading, a stock like Amazon will be a good stock to do options in. And I will also be teaching you about options later on. So for right now, I've told you, evaluate the financial health of that company. Start digging deeper into their company financial reports. All public companies have to release quarterly and annual reports. So you want to check into those companies. You're going to have to start doing a lot of research. When you're buying the stock, how do you buy it? Number one, I'm going to tell you to open a trading account. And for today, I'm only going to refer you to two, but there are so many of them out here. My favorite one is Robinhood. I love Robinhood because they have really disrupted the trading world, right? They are almost the first people who started these free trading accounts. Like, you would buy the stocks for free. I mean, you will buy it and you're not going to be charged any commission for entering into the trade. You're going to check on my links below. I'm going to put a link into the Robinhood app. The other one I would suggest you get into is TD Ameritrade. And the reason why I say that is because TD Ameritrade has a little bit deeper research compared to Robinhood. Like, you can actually go to a particular stock and you can learn more about the current events that are happening concerning that particular stock. They're a little bit more detailed compared to Robinhood. Once you do that, another reason why I want you to do TD Ameritrade is because you can do paper trading where you're not using your real money, so that you can start getting acquainted and familiar with the trading. Also, if you lose money on the paper trade, you're not going to be crying that much, right? So once you do that and they open your account, you're going to go ahead and deposit some funds. So you're going to ask yourself, how much money am I willing to lose without feeling bad about it, without affecting my livelihood? So for some of you, you might want to do $100. Some of you might be comfortable with $1,000. Whatever it is, once you've deposited the money, don't just start trading. Do your research. So today is just for you to go research about the companies you're familiar with, the companies that you like, and then the next course of action, open a trading account, period. Once you do that and you've researched the companies that you like, go and place an order. So right now I'm going to show you how to enter into our trading using Robinhood. It's very simple, but for those of you who don't know how to, I'm going to show you how to do that right now. So now let's try and place some stock, let's try and get some shares of some companies, right? So
the first thing you already did, you clicked on my link at the description box and you went ahead and opened your Robinhood account. It's going to take you like 24 hours before they can approve you if you have filled out everything that they requested you to do. So now you've already done your research and you're like, you know what? I think I want to get, let's say maybe Facebook, a share of Facebook, right? So you're going to come here, search. Most people use the phone version, but I'm showing you with the computer version because I want to just share the screen real quick and show you how to trade it. So you search for Facebook here, for instance, if you want to do Facebook. And right here, you see, you can, you can say how many shares you want to get. So let's say, for instance, you want to get 1 share of Facebook. That means for every point Facebook moves in your favor, if it goes higher, you're getting those amount of dollars for the share. So for instance, if you only get 1 share and Facebook moves $5 right here, that means you only get $5 profit. So some people will get more shares. So if you want to get 100 shares of Facebook, that means you have to spend $21,000. Many people don't have $21,000 to throw in a Facebook stock. And even if you did, it's quite risky because your return on investment doesn't pay out that much. For me, I will not do that. So I will show you, like, if you're that person who, if the stock is quite expensive, the best way to go about this is to trade options. So trading options means you have some restriction here as far as the dates. The closer you are to the expiration date, the cheaper that option. So for instance, if you have Facebook, if you want to bet that the Facebook stock is going to keep climbing, and before the expiration of February 7th, Facebook stock will be higher than 212, higher than the strike price of 212.50 right here. What you're going to do, you're going to go ahead and get that. You're going to get a share. One option equals to 100 shares. And you found out one option, 100 shares for Facebook, if you buy it without using options, it was like 21,000, right? But now, if you only buy one option, that is 100 shares. And 100 shares right now, how many contracts? If you say you want one contract means it's 100 shares each right here. That's going to be $123. Meaning, if Facebook moves in your direction and it moves by 5 points, you're just going to ask yourself, how much money would I be making? So you multiply 100 by whatever amount that stock moved. So on the other hand, if by February 7th, that Facebook stock went down, it never moved to 212, that means you're going to lose your $100 there, which is not as bad as compared to getting into Facebook, 100 shares of stock options, and you're spending 21,000, right? So let's say maybe you want to just get 100 shares, 100 shares, no, 100 contracts, meaning is 100 times 100 is 10,000, right? 10,000 shares. So you can play around with that. If you want to get 10 contracts, it's 1,230. If you want to get 100 shares, it's 12,300. You want to get 5, $615. So time in force, for $1.23, the limit price is between 120 to 126. If you get it at 123, usually they're gonna sell you those contracts. So you will just go ahead, review the order and place that order. So other things, like if you're one person who watches Netflix every single day, You can search Netflix. Netflix is $369.25 per share right now. If you want to buy it outright, it's $369.25. Unless a stock moves by a good amount of points, buying one share only is not really gonna give you good returns unless you're looking into holding it for a longer time. Yeah, so if you're one person who likes to flip and flap and flip, then trading options is your best bet, right? So either you do that one or you come and trade options. So let's say you're one person also who like to go to Disney. You will come here and you will just click on search and you just say Disney. Then you come buy that, or you come trade options and you're gonna be like, oh, I think Disney is gonna be going higher. So you might actually change the expiration date and say, you know what, I want to book it for March 6th to give myself time in case it doesn't climb as fast as I want to. Then you find out that the price gets higher the longer your expiration date. Look at that. February 7th, the price is what? $3.43 per share per contract. If you do March 6th, $4.93 for a strike price of $1.47. All right, that's it for today's discussion. I'll be coming in with some in-depth training on how to trade options, how to look at some statistics and analytics and all that good stuff very soon. So go ahead and subscribe. Don't forget to turn on your the ring bell, and I will see you very soon.